Hi, this is PR Sundar and welcome to this special episode where I'm going to show you how my view went terribly wrong in one of the trades. I think on July 20th, INDUSIND Bank was supposed to declare the result the following day. So I took a trade and I posted in the Twitter. I can show you that. So this is what I posted and I was little bit bearish about INDUSIND Bank results. So what I did, I bought 8,600 call option, 2 lots, and because the lot size is 900, so 2 lots I bought for 33 rupees per share and then sold 6 lots in a 1:3 call ratio. Why? The logic is very simple. I buy for 33 rupees, sell for 11 rupees into 3 is 33 rupees. So my buy and sell is almost the same. If INDUSIND Bank trades between 860 and 900, I would have made very good profit. And anyway, I was worried in case if my view goes wrong. So I sold some far out of the money put option just for about 2 rupees 80 paise. And one of the reasons is here, when I do 1:3, 1:1 the margin benefit is applied. For the remaining 2 call options become naked call option. So when you have 2 naked call options, when you go and sell 2 put option, so they both become hedged positions. So you don't have to pay more margin money. So to sell the 800 put option, you have to pay only very little margin money. So these are all the tricks that you need to know. So what happened? My break even was around 920. So that time, it was trading around 870, 875. I thought 920. So I didn't think that the company will declare very good results. But what happened? That day, INDUSIND Bank came out with a very good result. Next day, there was a huge gap up. So I was in a good loss, I can say. So I didn't want to book the loss. So what I did, downloaded and put it in Excel. So I'm just showing only the Excel sheet. And I'm just remaining things, I leave it. Only the INDUSIND Bank, I have colored it. And you can see here, so INDUSIND Bank, 900 call options sold, 5,400 quantity and 860 call option bought. So this was my original trade plus 800 put option. So these 3 are my original trade. That's why I have numbered 1, 2, 3. First I did this, the second one I did this, and the third one I did this. What happened the next day? There was a huge gap up. So what I did, I sold 880 put option. That's number 4 you can see. I made about 19,000 profit in that. Then market went further higher. I sold 900 put option. Then 920 put option. 910 put option. Then 920 put option. 930 put option. The market kept on moving higher. Then I booked the profit in 880, 900, 910, 920. Then I sold 940, then 950. And the price started moving even beyond 950. When the price started moving beyond 950, I got so scared. If this keeps going like this, how? No, when a person met with an accident and he comes to the hospital, so what the doctors do first? The first thing is that, they do, let us say the guy is bleeding. So the first objective is to stop bleeding. And then only the treatment starts. So sometimes, in stock market also, if our positions are bleeding, the first thing you have to do something to stop bleeding and then you have to start the treatment. So how to stop bleeding? Market continuously going higher. So what I did, I bought 1,800, sold 5,400. So 1,800 buy, 1,800 sell, they are completely hedged, no problem. My problem is only the remaining 3,600. That's why you can see the put option has sold all quantities are 3,600. When the price went beyond 950, I got so scared, and to stop bleeding, what I did, I bought a 950 call option. You can see this is a buy option. It's not the sell option. Of course, here it is showing only the consolidated figure. So it was a buy option. Then to buy, you have to pay a lot of money. I think that one buy was around 30 rupees, I think. But 30 rupees, 3,600 quantity into 30 rupees, that will take away 2 lakh rupees. So what I did, I bought 950 call option by paying 2 lakh rupees. The same 2 lakh rupees I collected by selling 1000 call option. 950 buy, 1000 sell. Collected the same premium. So now I don't have to worry about market going from 950 to 1000. And then what happened? It went up to 965, then came back, it was recovering and everything was okay until the last trading day. What happened on the last trading day after the Fed event, and market shot up like anything, and INDUSIND Bank shot up even beyond 1000. So what I did, I just squared up everything. And now after doing so much of firefighting, you see what is the net result. So net result was 95,000 rupees profit. 95,000 rupees profit is not a big deal, but my view has gone terribly wrong. I did a lot of firefighting and I came out with 95,000 rupees profit. But also you must remember, for every one time I am selling the put option, I had to put 6 lakh rupees as the margin money. But it doesn't mean that for 10 times I used 6 lakh rupees. Like 1 time sell, 2 times sell, 3 times sell, the 4th time sell, the first one we book the profit, we release the margin, then we bring it. So in a way, I would say probably I would have used about 30 lakh rupees margin. So I used about 30 lakh rupees margin, about 90,000 profit. So that is working out to be around a 3% profit for the margin deployed. So you have taken a view, that view has gone totally wrong. And then you did lot of adjustment trade, and despite all the adjustment trade, we came out with some nominal profit. But again, you always remember, let us say I sold 950 put option. Again, if the market reversed from 950 to 900 or 850, we used to be ready to do some other kind of firefighting. So this is one trade which I posted in Twitter. And I told you the next day itself things have gone wrong. I will share with you at the end of expiry. So I have shared it. So hope you enjoyed watching this video. Thank you for watching.